We are back with breaking economy news. The Labor Department has just released its jobs report for August, and we're getting an updated snapshot on the health of the economy. 142,000 jobs were added last month, actually less than the 161,000 economists had predicted. The unemployment rate did fall. It's now at 4.2%. We're breaking it all down. For us, we are joined by NBC News business and data correspondent Brian Cheung. He's over at the big board. And NBC News senior business correspondent Christine Romans is here on set as well. Good morning to both of you. Brian, I'll start with you at the board. Just give us the high level on these numbers.
Yeah, well, look, the current state of the labor market is that things are cooling. The pace of job gains in this country is indeed getting a little bit slower. We had expected about 161,000 jobs to be added in the month of August. Instead, what we got was 142,000. Again, that's not necessarily too far short. It's basically around there. But what was also interesting was you saw some downward revisions for previous months. This is standard practice. The government goes back in and says, all right, can we get a clear picture on what the previous 2 months looked like? And they actually revised down July by 25,000 jobs and then June by 61,000 jobs. That means combined, we had 82,000 fewer jobs than we originally thought. So again, in tandem with the less than estimates gains in August with the revisions down on June and July, this jobs market is definitely slowing from the 200, even 300,000 pace of monthly job gains we were seeing earlier in the year, Savannah.
Been some big corrections also that we keep on seeing, which is kind of makes it confusing when we take this right away.
Yeah, if you look at that July number that was only 80-some thousand, a couple of things happening there that were temporary. A Hurricane Beryl, which slowed down job creation, and also really hot temperatures. So there were some parts of the economy that weren't adding jobs there. So that was sort of temporary. But I think, this report is as cool as Brian Cheung. It is cooling down. The labor market is just not as hot as it once was. The question is, does it cool and then turn into something dangerous?
Right.
And because recessions typically begin with a big spike in the unemployment rate. So that's why I say this report is the most widely watched jobs report. And Brian, check me if you think I'm wrong, since the pandemic, really, because we're to see if that year plus of highest rates, it killed inflation, but does it kill the job market too? That's why we're watching so closely.
It's such an important question. What about specific industries?
Yeah, that cool bit was very cool of you, by the way, Christine.
I think we need a sneaker shot just to prove it all.
No, I got the shoes on. Don't worry about it. But look, when we talk about the breakdown of industries in this report, pretty interesting to see at leisure and hospitality. Again, this has been the bars and restaurants jobs that has been driving a lot of the post-pandemic recovery. That was pretty strong. It added about 46,000 jobs in the month. But information, more white-collar jobs. These are jobs in tech. It actually contracted by 7,000 jobs in the month. So this is something we're going to have to watch. But when we look at healthcare and construction, that added about 31,000 jobs in a month, and construction also adding 34,000 jobs. So again, those types of blue-collar jobs still look like they're strong, which again could bode well going into the election. But again, were those white-collar jobs, especially in tech, we're going to have to watch those in the months to come.
Is a tech contraction like that surprising?
We need to really watch. Those tend to be higher paid jobs as well. So you want to really closely watch if that continues to worsen and what that says overall about the information economy. I would call this report on the whole healthy but cooling. And I think it feeds into the Fed's idea that it can start lowering interest rates, maybe 25 basis points. We'll have to see if the market thinks it could do more than that. But this isn't a disaster of a report. Right. 4.2% unemployment is decent. That spike we saw in July was concerning. We were worried that maybe that could happen again, and it didn't. So healthy job market, but cooling. It's not that gangbusters, robust job market of the last couple of years where anybody who wanted a job could go out and find a job. Now it's a little trickier than that.
Please correct me if I'm wrong, but healthy but cooling kind of sounds like it could equal that soft landing that we're looking for?
Yes, unless this is just the beginning of the cooling and it gets worse later on this year. So that's why each of these reports, I think, into the end of the year, we'll be watching them so carefully to see if the Fed was managed to kill inflation without really damaging the job market.
And when do we get an interest rate update?
We're going to get it in just a couple weeks. In September, we'll have it is September. We're in September, guys. Summer's over, and the Fed will be
not quite.
The Fed will be meeting. Right.
Christine and Brian, thank you both very much.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.